Hello and welcome to our lesson on monetary policy. So monetary policy is a tool that can be used in order to expand the economy or sometimes to rein in inflation. Before we kind of get into the specifics of monetary policy and how it's used, I want to make a distinction here. It's been mentioned before, but it is worth reiterating. The difference between money or wealth versus income, right? Money or wealth would be the amount of cash. Money would be the amount of cash you would have at a certain point in time. Wealth would be the total amount of assets you might have at a certain point in time. Income is a flow variable. So income would say how much do you make over a period of time. So if you had $1 million in the bank and you made $100,000 in the past year, you would say the money you have is $1 million. Your income for was $100,000 for the past year. It's just worth reiterating this again as we get to this point in the class where we start to talk about monetary policy and these issues come up again. So the Federal Reserve is a bank for banks. So it's considered a central bank. Countries with strong economies have central banks. This is where who banks can look to do business with, basically for their banking needs. How did the Federal Reserve get started? Well, there were several bank runs in the U.S. between 1873 to 1907. So Congress in 1907 decided to examine the issue. From that, the Federal Reserve was established in 1914. Now, if you go back and study the history, there was a lot of reluctance over having a central bank in the U.S., fearing it could be too big of a concentration of power in any one spot. The way that this was then established was not as one central bank for the entire U.S., but 12 Federal Reserve banks in 12 different cities across the United States. They were dispersed somewhat based on population at the time, in 1914. So there's more on the East Coast, then there's also one in Minneapolis and Denver and San Francisco and Chicago. But there are a whole host of them along in the East Coast as well. And you see in Atlanta and Philadelphia and New York and in other cities. The Federal Reserve is overseen by a 7-member board of governors. So each member serves a 14-year term. Chair serves a 4-year term. The board, the 7-member board, and the chair of the board of governors are based on appointments by the president, and it's scattered for every 2 years. If nobody retires, a president who serves 2 terms, by the last 2 years of the second term, they would finally have a majority on the Federal Reserve Board of Governors, but not until then. The idea was that the president shouldn't have too much influence over the board. Any one president shouldn't have too much influence over the Board of Governors. So each member serves a 14-year term. That being said, there are resignations sometimes. Who is the chair of the Federal Reserve? If you don't know this, I'm going to actually ask that you look this up yourself to find out who the chair is of the Federal Reserve, and probably the last couple chairs. The current chair and the 2 previous chairs. I would like you to find this out on your own. The chair of the Federal Reserve, some people will call this person the most powerful person in the whole world, even more powerful than the president. Others might say maybe this person's in the top 5 as far as power. The person who controls the monetary policy in the United States has an enormous amount of power, whether it's the most powerful in the world, 5th most, 50th most, whatever. The person who chairs the Federal Reserve is an enormously powerful position. Maybe I'm overstating this a little bit. The board members, once they're on, Congress can ask them questions, but they do what they want. They do not have to check with Congress before they make particular actions. So I say they answer to no one. Congress can bring them up and ask them questions, but unless the Federal Reserve Board is disbanded by Congress, like stopped, the members are pretty much free to do whatever they want. The question of why is it this way? Why aren't these people elected? Well, if elected, there might be a lot of pressure for policies that really benefit in the short term only, right? The short term only in order to get reelected. But because it's a 14-year term, there's a lot less of that pressure. Federal Reserve Board members can do whatever they think is right for the economy, even if it means perhaps a little bit more pain in the very short term for the economy. So that's the reason it's set up this way. This is controversial, though. There are some politicians who want to end the Fed, which is the title of the book by, I believe that's Ron Paul's book. It's literally titled End the Fed. There are others who do not like this system, do not like the Federal Reserve, and wish that the Federal Reserve would be abolished. Part of it, they have a lot of power and they are not accountable politically.